on today's stream, where I got Discord here on the left, where we're going to be just going over everything in the chats. There's actually a good bit of research on New Zealand that I was able to find from ANZ. God, ANZ has such good research on New Zealand. I was talking yesterday, I think, to you, Isaac, actually about New Zealand and the farm milk stuff, the dry powdered. There's a
Yeah.
fantastic fucking article that just totally breaks down all of like what's going on in the dairy commodity. Like it breaks down the entire dairy market right here in the NZ forecast update of
Okay.
farm gate milk. Like it tells you exactly where the pain points, where they're coming from China, and where the pain
Mm.
points in. You know what I didn't? You know what I learned actually from reading that? Most of the problems coming right now with the price of milk in New Zealand, it's the biggest export. It's actually coming from surplus that they still have from COVID. Because during COVID, they milked all these cows and they had all this milk. So, what are they going to do with all this milk that they can't sell? They turned it into powdered milk. And so the supply of powdered milk went through the fucking roof during COVID because everyone kept milking the cows, but they couldn't sell as much milk anymore. So they kept turning it
Mm.
into dried powdered milk, and that led into these huge fucking stockpiles. And now the price keeps going lower and lower and lower in order to try and drive out that old supply. And the demand, though, hasn't risen significantly enough to offset the supply fast enough. So you end up with this huge problem where the expectation for future demand on milk is horrid and the supply is super high and your currency is depreciating. Like everything I mentioned yesterday when it comes down to trading, by looking at it first as the whole exchange of value and like how businesses need to manage the fluctuation of prices just to fucking survive sometimes. They literally point out, oh my god, some dairy farms actually went out of business because they couldn't manage the exchange rate fluctuation, the inflation in, first off, their currency. They couldn't manage the change in these commodity prices that they have all this exposure to. And then the currency prices change their commodity prices even further. And then all these economic effects out of China killed all the demand for their product. So now they're just stuck with all this dry powdered milk and no one to buy it. So they're just forced to sell it at huge discounts. It's like it's so bad. It's so bad for those people.
It's
Yeah.
interesting to see that actually play out as well, like overall for the church too. Especially since you just told me about this information yesterday, I wasn't even aware that being one of their like biggest exports, such an odd export as well.
Dude, and not only that, but I mean, there's a whole written outlook right there by an institution, and it's freely available, and it's written by the person who wrote that Farmgate outlook at ANZ. It's only like 3 or 5 pages. It's not long at all, but the person who wrote that is the person who interacts with farmers, like from the bank, from ANZ. They go out and talk to the farmers and say, okay, what are your problems? What's your financials look like? And they try and help the farmers stay afloat. Like that's the person's entire job, is to gather information and then communicate with the farmers and then communicate that with the bank and communicate that with investors and the government. And wow, it that report was kind of eye opening. And then the next report I got from ANZ was this huge ass breakdown of absolute basic expectations for the RBNZ. And the expectations are for RBNZ out of ANZ and Westpac sometimes can be so well written and so clearly thought out that it's just like, well, I think I know what I'm going to be doing now for RBNZ. Because RBNZ is next week, so what is it? NZD, USD. So this is moving next week. And they're probably going to do nothing. They're probably going to continue pausing. Mm-hmm.
At the range probabilities you can see. You can
Yeah,
see the
it's
future.
probably going to go up to here this week. Because it's now in a very low probability zone. So selling here might be a really dumb idea. Because the probability of you
Like
catching the top this month, or for specifically today, the probability that you've caught the top today is very, very low. Because this is a 1 hour chart. So you go to a week for the week. Oh, those yield differentials are starting to pick up positively.
Yep, the differentials starting to pick up too.
Yeah,
Okay,
you
so
probably bottomed out. You probably that's an aggressive top
could
out.
go up.
Yeah.
Yeah, I mean, at minimum, you would probably go up to, when you go back to the week, you'd probably go up to that. What price was that? It's a little bit above.
Yeah, and this
So
is for
being
the
short right now
month.
probably isn't the
Yeah.
best, especially with the positive yield differentials. Because
Well,
on the
with the
week,
pause,
you could
yeah.
see on the week you probably could go up to like 6-1 almost.
Yeah, this is one of the reasons why I was going short Euro New Zealand.
Mm-hmm.
Because I wasn't totally sure about I was not totally sure about CPI, whether or not that'd actually be strong or not. If I go to Euro NZD, and it just kept going. I was getting shorts there, didn't work, getting shorts there, didn't work. And now you can see why it's like you're putting your stop up here and not immediately right here. Like, yeah, this is still giving good opportunity. That still was giving good opportunities for little tiny ads right here, just below that 50% line. Yeah, so Euro's still getting super strong. I mean, literally when you compare Euro US dollar, right? That huge spike up, and compare that to NZD USD, where it's just been flat. That it makes sense why Euro New Zealand hasn't moved. So, and not every trade works out perfectly. Even with these positive yield differentials going into a low, yeah, sure, that would have been a fine buy right here at that specific price. But I ended up expressing Aussie, and by expressing I mean actually trading. Expressing effectively the trade was trying to quote unquote express was long Asia Pacific. So that could be Australia or New Zealand or China, right? And the way you can get exposure to China directly most easily is through Australia and New Zealand. So if you have positive growth expectations in China, then going along Australia and New Zealand, not the worst idea in the world. So yeah, looking at these lows, actually let me real quick go to my chart here and then do this new feature here. There we go. Undo that. There's a new feature in TradingView. When you right click on a picture, there's these sync options. So no sync, sync in layout, and sync globally. So I have a different TradingView layout that I do my trading in. This is my streaming layout. So I have like a cleaner chart for you guys. But now,
is this a trade that you're in right now? I'm sorry.
Yeah. So this is literally just a view of, oh, cool, I can get long here. I mean, I was buying off the rebound. That's why it looks like I stopped out, but I was buying off the rebound there. See? Actually, I should probably get like the exact time, but
how do you determine when you're actually going to enter the market, right? So, and I think it just comes from at least me and Roxy's mindset of setting our limit orders at the beginning of the week. Like, for example, for this, we probably would have gotten stopped out because of that distribution. Right where that stop is, you can see that volatility, how the candle wick
Well,
came
I didn't
down.
know that this trade was going to work out. This is
Yeah.
relatively light position in all seriousness. The fact that it
Mhm.
worked out is
Um,
fantastic because I was also looking at it on, on the day. So the cool
yeah.
part about this indicator is at least I can do a replay and show you what I was looking at. So let's go ahead, bring up the replay. And we got CPI in like 16 minutes. I should probably bring up this for you guys on the stream so you can check this out. Come into the Discord, go to the general chat, and read all this stuff. These are expectations broken down by probability of what to expect US core CPI to be. Looks like I need to set this back by like one more candle. So this is the daily range probabilities indicator on Aussie dollar for the trade I got long on about 2 days ago on Tuesday.
Yeah.
So yeah, you see that this little peak right there is like, oh wow, this is probably bottomed out like close to 85-70% of the time, somewhere around here. This has pretty good value right here. And then when I go and I look at a week, I'm like, oh wow, the yield differential is no longer super negative. It's turning white. We're at a likely low here for the week. And then you go ahead and you pull up the month and you see, oh, that's still pretty negative yield differential. But oh wow, this is like 80%
Very,
of the
very
time,
good
this is the low
distribution
for the
with the
month.
80% chance at the bottom. Yeah.
Yeah, so I was like, oh. I mean, all I had to do literally to show why I took that trade is switch to 3 different time frames, a 2-hour, a 12-hour, and a 3-hour. Like, oh yeah, across all these time frames, there's a very high probability the low is in for the month, for the day, and for the week. I like that.
Yeah.
And it's like 80% on the day, 50 something percent, 60, somewhere between 50-60% on the week, and 80% on the month. It's like it becomes very very brain dead straightforward, like, oh yeah, I should take a shot long here. And whether or not it actually takes off here, this is the whole point of you start small in the positioning and then you add in. And I even put in I think in the trade group, I put in under boss trades. Yeah, I added to Aussie dollar long. Yeah, so there was a long Aussie dollar here and a long Aussie dollar there. You can see it on the stream. So I added to the Aussie dollar long in 2 places. And now net that Aussie dollar trades up like 45 pips because it's just been hauling ass today. Everything's been short the dollar. Oh yeah, well, that was a great risk management on euro dollar for the day, wasn't it? Yesterday. Wasn't that perfect timing to do some risk management on euro dollar? Yeah, man. Great.
And
time
then
to do some risk
what was the
management.
odds that their low was in if you hover over the 13.43% golden line at the bottom, the yellow distribution? What was the odds that
I gotta hide
that,
the
that was low
drawings.
for the day? Yeah. That was
The probability that the low is in for the day. Hold on, is that actually reading out the correct
it said
probability there?
82%.
You know what? I need to add a new piece of information, to be frank, because all it's doing is it's combining. See that 82% lower? So it's combining.
Yeah, 82%.
Yeah, what I'm trying to do is I'm trying to read where it says range : 14% and then 96. I'm intuitively going there to figure out, okay, including this bubble here, what's the probability that the low is in at this spot? And so I just need to put I need to update maybe this tooltip one more time with information of, okay, from this bin up, this is the amount of probabilities that you got. And then from this bin down, which is actually what that parenthesis says, that 96.14, that tells you the amount of low probabilities that you have from this, including this bin that's highlighted in orange and lower, because you can see it's at 13% next to the range, next to this lower 82%. It's just the addition of those two make 96%. So what I'm just trying to figure out instead is 100 minus the 82, because I'm just trying to figure out what's above what's below us right now. So it's like 18% of the time, roughly, you bottom out here. So this is pretty aggressive. However, you can clearly see that when you have aggressive bullish days, you're bottoming out somewhere around here, most likely. So, I mean, yeah, if it pulls back, that's a good adding opportunity. This isn't probably a great adding opportunity, to be frank. That's a better adding opportunity. That's a really good adding opportunity on the day. Yeah, isn't that kind of cool? You just stop yourself out there, along there. Good stuff. But yeah, now the question is, oh, how much higher can we go? Well, probably that much higher. Probably about another 15 pips. We got like 10 minutes till CPI comes out. Hello Prinsley, hello Philios. Nice to see you guys in the stream. You guys can come and hang out in the daily plan chat here if you want. I see James and Ahmed in here. The stream's only going to go on till 15 minutes after CPI, and then I'll still be here in the daily plan chat hanging out. Yeah, let's go over some expectations for CPI. So, CPI is probably going to come in relatively flat. Somewhere between 0.15, what is that, 15 basis points to 25 basis points. So the expectation's not for a huge change, you can see by the forecast. The expectation is not for a huge change, effectively sideways, compared to the prior number, which isn't going to be a huge deal, and it'll make US dollar on the weaker side. What is a big deal, though, is that the inflation data that's being prepared right now in the high-frequency inflation data is saying August is going to see a huge bump in inflation. And if you've been reading any research from the outlooks or from various institutions, you would see, hey, the forecast for August is getting very significantly bullish. To the point where, yeah, this could cause a rate hike. If it's also dependent on if September, see if this dot over here in September also goes up, yeah, then we got a problem. When the Fed reads this information, they might hike 25 in order to prevent September from also going up. And the fear is just that August prints really, really high, and expectations for September also go really, really high. And that would cause the Fed to do 25. And yeah, that would be a long dollar trade. And that's what I got kind of set up right here, right? Up, up, up to this likely top for the month, and then down, down, down. Going into this inflation print. It's because it'll make the Fed more hawkish. It's just a matter of, does it actually make them change anything? Because if you get US inflation going up, but the Fed doesn't change anything or aren't expected to change anything, then this down move doesn't occur. So net, it's safer to assume that you continue going up until the market actually believes, oh, the probability of the Fed hiking is like greater than 50%. Because if you go to, what is it? Fed Watch, right? Yeah, CME Fed Watch. What's the current probability of a rate hike at the next meeting? It's like 13%. It has been unchanged. In fact, it's actually been down over the last month. So as long as the probability of a rate hike stays like below 20%, things should be fine. We should be fine. Being short the US dollar until those trading expectations update. Because once those trading expectations update, then we're screwed. Until then, staying short the US dollar is actually the smarter thing to do. Because if the Fed's expected to do nothing and stay on hold as inflation rises, it'll be more of a boon shorting US dollar. Let's check out the chat. Thank you guys for watching. I didn't stream the last couple of days because I just didn't wake up on time. And I'll be honest about that. When you miss the starting time for your streams, it's like, well, crap. The people who would usually watch me are now not watching me. Also, no face cam today. I just rolled out of bed, started streaming, started setting up the daily plan, and was very, very happy to see all the trades doing especially well. The USD CAD short I put on is now officially in 100 pips of profit. Yeah, and I'm going to keep rubbing this in, people's faces. 2 pips off from the low, 9 pips off from the high. Like, what this trade was, 8 calendar days, 6 trading days. It was like not even a week's of trading. It was, this was fantastic. This was fantastic and easy. But it was only easy because of this indicator. Oh, man. Like, how obvious does that need to be for where your top comes in? Okay, doke. 5 more minutes. Well, less than 5 minutes, like 4-ish minutes till the CPI comes out. I should probably have Financial Juice open. Okay. Oh, there's also an OPEC monthly report coming out. Sweet. I'll show you guys the most interesting part about that report. There's like a single page that tells you the oil price outlook from OPEC and the factors that they're considering for that outlook. It's one of the most succinct pieces of information when it comes down to oil expectations. In the Discord, though, if you go under commodities in trading, there's this channel, Primary Vision Network. I rant and I rave about them, about how good they are. They have 2 shows a week. They have the EIA update and they have the economy update. The economy update is like a week ahead outlook and a look at all the current macroeconomic indicators. And I highly recommend it. So I highly, highly recommend PVN simply because of how detailed Mark Rossano goes. And then also if you're doing a lot of oil trading and a lot of oil analysis for whatever reason, EIA is a good spot to go, especially considering it's also in video format. You don't have to read it. You just have to watch and listen to it. So that's all well and good. Yeah. Probably it's a good time to take requests. I mean, if you're here in the live stream and hanging out, you guys get little special privileges. And same thing with you guys here in the Discord chat. You can go ahead and hang out, say hello, and yeah, I took my profits from USD CAD a couple of hours ago because of coming CPI. Gotcha, Pascal. Yeah, so whatever assets you want me to take a look at, I'll go ahead and take a look at here just before CPI. Oh, don't want to forget to launch the voice chat for Financial Juice. Yeah, Euro New Zealand hitting the top for the month. I wonder if that'll actually be the top for the month. It probably will be, because New Zealand can get quite a bit of a bump. Oh, wow, look at that positive yield differential there. Yeah, check that out. Super positive yield differential today on New Zealand.
1 minute remaining. I'll be leading with the US CPI year over year.
All right. FYI, guys, go to financialjuice.com and look at the economic calendar right now because the stream's on delay. And also, I'm not sharing the audio from Financial Juice here in the Discord. So if you're hearing my voice, go to financialjuice.com, like literally right now, so that then you can see the release in real time for yourself and react to it if you need to. Okay. 10 seconds.
10 seconds.
Whoa. We're getting some volatility.
3.2%, 3.2% lower than forecast, 3.3%
Oh,
month over month,
shit.
0.2%, 0.2% as expected. Core CPI year over year, 4.7%, 4.7% as expected. Core month on month, 0.2%, 0.2% also as expected. So US initial jobless claims at 248k, 248k. That is higher than the forecast of 230k, with continued claims coming in lower at 1.684 million, 1.684 million. Again, lower than forecast at 1.7 million. So looking to the markets here, just seeing some downside movement in the dollar and some upside movement in the S&P 500. Also noting Bitcoin and WTI catching some bids off of this release as well. So again, to go over this again, US CPI year over year did cool off 3.2% on the prior of 3%, but lower than the forecast of 3.3%. Month over month reads and the core year over year coming in as expected at 0.2% for those month over months.
Yeah, so we came. When you go and you look at the general chat and you look at the forecasts, all the forecasts were saying, yeah, we're probably going to line up with expectations. So all my trades just jumped up like 30 to 20 pips based off that. Fantastic.
So US short-term interest rate futures gain after the CPI inflation report as traders firm bets against another Fed rate hike. So again, traders firming against another Fed rate hike in the short-term interest rate futures, which are gaining after the CPI print.
Well, that's all we needed to hear. That's everything I was anticipating, and I think I mentioned all that stuff live on the stream. Or at least before the stream here in the daily plan stage. Yeah, so let's see here in the live stream chat. All right, no new information on the live stream chat. How are you guys doing? And then also you guys here in the daily plan chat, how are you guys holding up on your trades? And if you want to come on up and speak, you can raise your hand and show requests and say hi. And if you want to talk about your trade, you can. Things look pretty straightforward here. So let's do AUD USD. Check that one out. That one had a nice spike. If we go to a 1 hour, we should see, yeah, the yield differentials are picking up a bit. If we go to Euro US dollar, yield differentials you can see are picking up on the 1 hour. USD CAD, we should see a red bar here. Not a red bar, but red differentials, which is, yeah, you can clearly see the red differentials are picking up. What else is there? NZD USD. And then Great British Pound. So we should see positive green yield differentials here on this one. All right. I see a show request. Allow James to hop on and speak. Oh, I wonder why that indicator didn't load that time. Hello, James. I can see it in here now. Whoa, yeah, those are positive. We got a big spike on positive yield differentials here in the 1 hour, the last hour. Rocks, buying gold. Alrighty. Let's see here. What else? Yeah, Great British Pound, USD. Do we see positive yield differentials here as well? Sorta. It's on the more mixed side, but very short term. Yeah, why is Great British Pound not doing as well? What's going on in the UK? Why is Great British Pound underperforming? I can hardly hear you, James. Sorry about that. I mean, if you go to the high, yeah, I can hear you now. Yeah, the only thing I see that's super positive is maybe you bottomed out for the month right here, like way at the beginning of the month. I'm talking about like August 3rd. And your yield differentials have been getting a bit more positive just on the short and intermediate term. It's been improving. So this is where, use a 12-hour. You see the yield differentials starting to get positive. That's a good buy. That probably was a good buy. Yeah, I'd be cautious getting any more shorts from here. These yield differentials can run you over and take you up like 100 pips to that high. Yeah, you could see very quick, very fast moves higher from here. Because if the expectation still is for no rate hike, and we're just going to be waiting until the August data for CPI coming out in September for when there's possibly going to be a surprise upside move in CPI, yeah, we're probably going to go to tops for the month. If we go to like euro dollar. The expectation on euro dollar that I had is we're going to go up to this peak in your high returns distribution. So call that what, 111? Yeah, you could call it the 111 psych level. You can call it 111. Somewhere in the upper part of 110, the upper half of the 110 handle to a 111 or just above 111. That's this whole area right here is valid. This 50 pip range around 111. So that's plus or minus 25 pips from 111. Cool. I don't think I need that wrong.
I missed out this morning.
Well, there was really no reason to sell it unless there was a surprise spike up in this particular CPI. But there was no reason to totally anticipate that.
Yeah, well, the markets were selling it.
I mean, the market, you're right, the market has been selling it, but that was like for the last 2-3 weeks, not this week. Expectations changed to this week.
Yes, it looks like it was a double bottom and it broke its neckline. And it broke its neckline prior to the news showing that there was going to be a spike.
I mean, you can interpret it that way, but it's a lot easier just to say, people kept buying up yields for euro relative to US. It's a lot simpler to say that.
Yeah, you're right. Yeah, Japan has been buying up the euro bonds, right?
Yeah, well, mostly US.
And US bonds.
Yeah.
But they've been buying both.
Well, record amounts of US bonds. literally record amounts of US bonds have been being bought up by the Japanese in the last month. It's insane.
Really?
Oh yeah. Oh yeah.
Have they been?
There's a whole video like that's an hour long by Winston Nakamura. He did a whole breakdown of the purchases.
Yeah. So, but he's been buying Euro bonds as well, I think.
Yeah, they're buying some Euro bonds, but it's like a quarter the size. So it's still significant. Read the chat. No, it's just a request. All right. Yeah, so things are pretty straightforward here.
Your New Zealand doesn't seem to want to move, though. I guess because both currencies have gotten a little boost.
Yeah, I mean, I would still anticipate this thing to go lower. It's just a matter of figuring out why the hell would this thing go lower. I mean, technically, this is all a bunch of net neutral seasonal expected moves for the rest of the month. And then you got these 3 trading days, the 13th, 14th, and 15th trading day that are super positive seasonally, which is this period of time right here. So, I don't know. Maybe the next best time to short this thing is somewhere around here, around the 16th, 17th, 18th. So either shorting around here was the smart move, and then adding to that short later in the month over here will be the next smartest move. But I don't know. We'll see. We'll see how that interpretation plays out.
I haven't put my 50 basis points on yet. I almost did this morning,
Ooh.
but I didn't. Because it did get back up to 181.5, 181.6.
Yeah, it went a little past that.
Yeah.
It did retest that spot, man. But you can see people are selling that spot. People are looking at the same things we're looking at and saying, oh, yeah, you know, that's actually not that bad.
The big guys are selling that.
Yeah, this is actually not that bad of a spot still to sell if you're anticipating this rollover to actually occur. But you know what? There is still some probability.
I'm going to kind of wait.
Yeah, there's still a probability that the top doesn't come in here. 83.5% of the time on Euro New Zealand, the top does come in, you know, below here, right? So that implies what, 16% of the time roughly your high for the month comes in above that line. So it's like it'll be just fine. It'll be just fine.
It'll show itself, and then I can probably add into the trade later.
Yep. I mean, this is insanely straightforward. Oh, we're seeing like wickbacks in all these setups. If we go back, oh, didn't mean to drag that. Look at that. All that sell-off. Ain't that interesting? Let's check it out on... yeah. Wow.
Steve seems to be getting strong off of this thing.
That doesn't actually make too much sense. Considering we're not going to get another inflation print for another month, and things are still looking pretty good here. Euro USD is also seeing a similar thing occur. And USD CAD is also seeing a similar thing occur. All these little spikes. Even though the yield differentials are moving in the right direction on all these pairs, and because of that, I'm skeptical, to say the least. Well, let's see how it looks for the week. Look at that. So this is the target I got for the month. Yeah, so I'm in no rush to get out of this trade. No reason not to expect this thing to continue going higher at this point. Momentum still looks good. For what that's worth. Alrighty. Well, that was CPI. There's really not much more to go over and look at.
What do you think about Euro JPY?
Let's see. Well, I did stop out of it. And you can see that was a pretty good stop out, right?
Yeah, I got stopped out too.
This was still a pretty... I mean, back here it was a decent short, and it did pretty well. And now, you know what? With CPI doing its thing, this is actually... This probably wasn't the worst short, or rather long, in the world on the CPI expectations. But now comes the question, does it top out here? Or does it top out here? Do you see another insane rally against the yen? Definitely not
When do you expect
impossible.
a pullback?
No,
When do you expect a pullback?
A pullback is not necessary.
No way.
Like, why would a pullback need to occur? You can top out here, and then it'll pull back for the rest of the month, or it can top out up here, and maybe pull back for whatever remaining time there is here.
I see.
Okey-doke. Well, I'd say that was a pretty good stream. So if anyone who's watching on the stream wants to continue hanging out, I'll be here in the daily plan stage. And anyone who wants to hang out, chat, go over some more charts, can come on and hop into the Discord.